Hey friends, Finance Minister has announced the budget for 2022 and the budget is focused towards one theme, growth. The total budget for FY 22-23 is 7.5 lakh crore, which is up 35% as compared to last year. Now I have already created a video on key highlights from the budget. In case you have missed it, do have a look. Now as far as investment is concerned, since the focus of FY 22 budget is on growth, this would attract a lot of investment from FII. And as far as specific sectors are concerned that would benefit from this budget, there are certainly a few sectors where the government has a clear focus. So in this video, we'll look at specific sectors that would benefit from the budget and stocks to watch out for those sectors. Alright, let's get started. First sector that would be the direct beneficiary of the government budget would be the infrastructure sector. Government has a clear focus on the infrastructure sector right from the roads, railways, airport, ports, mass transport, water transport and logistic infrastructure. And one company that would be a direct beneficiary from infra spending would be L&T. Now the best part with infrastructure development is that it would benefit not just one sector but multiple sectors within infrastructure. For example, in order to build the infrastructure, it would require cement. So the cement sector would benefit from it. Some of the top companies in this sector include Ultratech Cement, Shree Cement, Ambuja Cement in large cap category and Ramco Cement in mid cap category. The next sector that would benefit would be the paint sector. Within this, Asian Paint is the most preferred choice. Then government has increased the budget for rural tap water connection by 60,000 crore rupees. So it would benefit the piping sector that includes a lot of good quality companies like Astral Pipe, Prince Pipe, Supreme Industry and Apollo Pipes. Within the road construction segment, newly listed company GR Infra is a good bet. Then infrastructure sector would benefit cables and wires that would include companies like Polycab and KEI Industries. Then government has planned to introduce 400 Vande Bharat train which would benefit companies like IRCTC. Then government has a lot of focus on logistics sector that include companies like VRL Logistic, Container Corporation of India, All Cargo Logistic and Gateway District Park. When government would focus on capital expenditure, one sector that would see a rise in demand would be banking sector. Just think about it. Banks are the backbone of the economy and the economy would grow, banks would have to grow. Now recently the banking sector has not done well and it is mainly due to FIIs selling huge investments in India. And please note that FIIs have a huge stake in Indian banking sector. So banks suffered a lot due to this sell-off. But to be really honest, this has created a golden opportunity to invest in the Indian banking sector. I have been very bullish on this sector for the next 5 to 10 years and there are great companies within this space. So my pick from banking sector would be ICICI Bank and HDFC Bank from large cap sector and Federal Bank and IDFC First from mid cap sector. All these banks have posted great Q3 result and are available at very attractive valuations. Next sector that would benefit from budget is defense sector. India has a lot of dependency on foreign countries for defense import and hence government is now encouraging domestic manufacturing and 68% of defense capex would be kept for domestic companies. This means private companies like L&T, Paras Defense, Data Pattern and MTAR would have a very bright growth prospect. Next sector that would be the direct beneficiary of the budget would be the telecom sector. Government has announced the rollout of 5G spectrum auction in FY 22-23 and the government has also focused on releasing contracts for ongoing BharatNet project to set up broadband lines in every part of the country. So it would benefit telecom companies like Reliance, Airtel as well as telecom equipment providers like HFCL, Sterlite Technology and Tejas Network. Next sector is green energy. Government has a strong focus on green energy sector and it is targeting about 400 gigawatt of installed renewable energy capacity by 2030. Out of this, about 280 gigawatt is expected from solar. Just to give you an idea, as of September 2021, India has 101.5 gigawatt of renewable energy capacity. So that means the target is over 4 times the renewable energy production in the next 8 to 9 years. Within this, solar energy currently contributes around 48.5 gigawatt as of November 21. So the solar energy target is almost 6 times in the next 8 to 9 years. Now that's a really ambitious target. Government has a lot of focus on solar energy production and has also allotted a budget of 19,500 crore for PLI of manufacturing of high efficiency modules with a priority to fully integrate manufacturing units from polysilicon to solar PV modules. This is over and above the budget for solar modules that was declared earlier under PLI scheme. Now, one of the reasons of our strong focus on green energy and especially solar energy is because India has a lot of dependence on China and other countries for import of solar energy related products. And hence, Indian government want to encourage domestic manufacturing. So companies that would benefit within this sector include Tata Power, NTPC, Adani Greens and Reliance, as Reliance is also a foray into the solar power manufacturing. Then one small cap stock that has a bright growth potential in this sector is Borosil Renewables. It is mainly into glass manufacturing for solar panels. I have covered this stock in depth in my weekly video series. Then final sector that would benefit from the budget is electric vehicles. Government has specially announced to bring a battery swapping policy to boost the use of electric vehicles in the country. This would benefit battery sector companies like Exide and Amara Raja. Then it would also boost the overall EV ecosystem, and there are many great stocks in this sector including software companies for electric cars such as KPIT, Tata Elxsi and L&T Technology. Apart from this, Tata Motor would also benefit from electric vehicle adoption as it is currently the leader in EV car sector in India. Friends, I keep hearing a lot about FII, buy and sell and how much markets are fluctuating with US Fed decision related to interest rates. But let me tell you a secret to create wealth. Do not worry about FII buying and selling in the short term. In one of the recent news, Mr. Kumar Mangalam Bidla has mentioned that India is on the cusp of decade-long capex mahotsav. Now try to understand this. It doesn't matter in the short term whether FIIs are buying or selling from India. If the Indian economy is growing and there is a new wave of capex, FII will eventually come back. And trust me, if you wait for FIIs to come back, it would be too late. So my suggestion is simple. Do not look at Sensex or Nifty movement on a daily basis and try to predict the future whether Nifty would touch 15,000 or 20,000. It is a lifetime opportunity to be a part of this India's growth journey and create wealth in the next 10 to 20 years. Yes, you got to remember a few things. Do not get carried away from hyped sectors. At the end of the day, earnings and cash flow decide the true value of the company. So don't just invest in a future business at any levels. Just identify solid businesses at good valuation and keep investing systematically. And don't look at a stock market as a platform for excitement. A lot of people say that they get bored when the stock market doesn't move. Friends, trust me on this. Real investing is very boring. If you want to create wealth, just invest in a boring way without worrying too much about the market movement in the short term. And if you are looking for excitement, then please visit Vegas. On this note, I want to share a few video clips of top investors and their viewpoint on the budget and the way forward. First clip is of Rakesh Jhunjhunwala. Let's hear him out.
And the addition they have taken for the next 3 months is only 2,90,000. I can bet that the net tax revenue of the government in the current fiscal will be 3 to 4 lakh crores. 3 to 4 lakh crores higher than the budget estimates. So the fiscal deficit will be at least 1.5% lower than what is being projected in the budget estimate. And similarly for next year, if this year the collection is higher by 3.5 lakh crores, then next year the collection will be higher by 4 lakh crores. So I think this is the conservatism of the highest level, and all the concern about borrowing in the bond market will be addressed. We just have to wait until March. And when the January tax collections come in, this will become very apparent. Because I think in January itself we will meet the budget estimates, revised budget estimates. That's an important point I want to make. Second thing, I think, I'm not looking at the point of view of 1 year expense. I think we are missing the trees for the woods. What is this reflecting is a permanent growth in the tax to GDP ratio. And the improvement that the government is trying to make in the tax laws and the administration in the last 7 years is now coming to fruit. And this increase in tax to GDP is going to help us in years to come. Second thing I feel, third thing, that we are projecting 8.5% nominal GDP growth. It may be 8%, But as a country, we are planning for 10%. We have the courage to say we'll grow 10%. And a lot of the reforms, especially the PLI, the ease of doing business, has come into reflect the China factor. And we have a credit cycle which is past us and a capex cycle which is ahead of us. And the world wants to invest in India. So I remain extremely bullish in as usual. I think markets will do well, and more than that, the country will do well. We're going to have growth with good social welfare. Ma'am, what you buy is very important, and what valuation you buy is more important. So I don't see sunset and I don't see sunrise. I'm not going to buy any sunrise at any price. And not that I will not buy sunset at a price. And I don't know what you mean by sunrise and sunset. Are banks going to go out of fashion? Are metals going to go out of fashion? Can you create metals on the internet? So I don't look at sunrise and sunset. Because the sunrise are all ridiculously valued. And don't forget that ultimately, price is a slave of earnings. That is, if there is one truth in the stock market worldwide, stock prices ultimately are slave of earnings and cash flow.
So Rakesh Jhunjhunwala has made couple of key points. First, he mentioned that the tax collection estimates that government has taken are ultra conservative, and he's saying that the tax collection for this year would be 3 to 4 lakh crore higher than the government estimates. Now, if that happens, then fiscal deficit would go down by 1 to 1.5%. And this increase in tax to GDP would help India in years to come. And he clearly mentioned that ultimately prices are the slaves of earning. I hope you understand where Rakesh Jhunjhunwala is hinting towards. Now let's look at viewpoint of Mr. Sourabh Mukharjee on budget.
Sourabh, hi, good afternoon. We were speaking to Rakesh Jhunjhunwala a while back, and he said there could be a big positive surprise coming in tax revenue collections in FY23. He says it could be about 3 to 4 lakh crores higher than what the government is estimating. Do you think it was that conservative an estimate this time around? And what is your big takeaway?
Look, I think this was Finance Minister Sitharaman's best budget. She looked in charge. She looked like the boss, really controlled announcements, measured announcements, brief speech, no faltu dramabazi, bang, bang, bang. It was almost like a foreign investor presentation. In terms of the budgetary, the revenue surprise that Rakesh ji is talking about, my reckoning also is that the numbers she's presented are very gettable on the revenue side. If you assume that we'll have 8% real GDP growth next year and assume 5% inflation, that means nominal GDP growth will be 13%. For the government to grow 14-15% receipts, for the government to grow receipts at 14-15%, which is what they'll need to do to get to that 6.4% deficit number, I think is very gettable. And I think that's the spirit in which they realize that there's no need for the sort of usual anti-rich tax measures that unfortunately we've seen for decades in our country. So no extra surcharges on the rich, no adverse CGT announcements. So very positive budget. Felt like a budget from an FM, totally on top of her game, someone who knows all the levers, all the fiscal levers, and was playing the fiscal levers adeptly as we head into what looks like a 2 to 3 year economic recovery. So look, from I think 20th March 2020, I've been shouting to whoever's willing to listen to me that when you have a recession in America, you typically get a 3 to 4 year economic boom in India. In fact, we've never had a strong economic boom in India without a recession in America. So we've got that scenario nicely playing out. If you just do the sort of basic maths on the budget and look around us, 3 strong drivers of the economy staring at us in the face. Firstly, the capex thrust that the FM announced. She's saying 2.9% of GDP. If you assume that the multiplier, right, when the government spends 1 rupee, that's actually a 2 rupee multiplier for the economy. So around 6% of GDP is the capex thrust. Add to that the IT services boom. IT is around 10% of GDP. That sector is going to go gangbusters for the next 2-3 years. So that's the second big part of GDP flying through. And the third is, as we come out of COVID, right, the contact sector, schools, hotels, public transport, those will normalize. So over the next 2 to 3 years, we've got 3 very powerful economic drivers which will push us upwards. And now that the budget is behind us, my request to your viewers, we focus on this economic recovery and benefit from it. Don't get lost in the day-to-day as stuff about what are FIIs doing, what is the Fed doing. That's a waste of time. Focus on the 2 to 3 year economic recovery and make sure you make a lot of money from it.
So again, Sourabh Mukharjee is quite clear and has reiterated that the next 2-3 years in India are going to be an economic boom. And he also said that do not get carried away with what FIIs are buying and selling and what Fed is doing. Focus on economic recovery. Then he also mentioned about 3 themes for investment.
Look, I think the 3 straightforward themes where there is no great sort of science here. 3 straightforward themes emerging from the budget. One is there looks to be a capex recovery and an economic recovery playing out adjacently. Top quality private sector lenders should be a natural beneficiary. It also helps that the government didn't mention any incremental support for PSU banks. So top quality, well-run private sector lenders to benefit from the capex/economic recovery. Second is building materials companies. It looks like a combination of a real estate recovery and a capex recovery. So from paints to cement to pipes to adhesives, the entire gamut of well-run building materials companies should do well. And the third is the global tech boom. India is the software programming center of the world. Sure. An IT services boom and a startup boom, which will be further fueled by the relief that the FM gave on startups today. So 3 straightforward sectors: tech, top financials, and building materials.
So 3 sectors he mentioned that would benefit from the budget include banking, building material, and global tech boom. I have already covered my viewpoint and the top sectors to look for and the stocks within each sector. Infrastructure is a big theme and building material sector would be a key beneficiary right from cement to pipes to paints and cables and wires. Then banking sector would be a key beneficiary. Then government has a lot of focus on green energy and electric vehicle segment. And one more sector that would benefit is telecom, as government has a strong focus on digitization. And finally, technology would be a global theme for future. So this is it from my side. If you find this video informative, do share it with your friends and relatives. I'll see you in the next video. Till then, take care.